even though you don't have payments on those student loans and they're deferred, a certain part of that 0.5% or 1% of the outstanding balance will be counted towards your debt to income ratio if you don't have a qualified plan. So if you have $300,000 worth of student loans out there, we're going to have to count a minimum, and you're just not repaying them, they're deferred. We're going to have to count a minimum of $1,500 a month against your debt to income ratio. So it's very important. Other things that affect your debts are payday loans, things like that, or if you have this, the underwriter sees that coming out of your account, your bank account, that will be added as a debt to you. The buy now, pay later accounts, those are things that you want to consider. Also, we do if the payment is going to be if the repayment on it is over 12 months, it can be counted. You would have to add that to your debt to income ratio. If it's less than 12 months, great, but guess what? You're going to have to document that. You're going to have to go online to that company. Sometimes it seems like they just have an app, and get the contract and show the payments that you have, and don't open any new ones while we're in the process. The last thing is identification. We need you to prove you are you. This is one of the first things that we ask for, is either government issued ID, usually a driver's license or a passport, front and back copies of it. We need to verify your social security number. We usually do that with your income docs and your tax returns and everything. Sometimes if there's fraud alerts on your reports, you may be required to show a copy of your social security number and to prove that it's you, so that we can be assured that it's you. If you're doing a refinance, this is very important. When you're doing a refinance, whether it's one home or two homes that you own or more, you're going to have to show a copy of your mortgage statement on those homes if you still have mortgages on them, a copy of the insurance policies, and if you have HOA or other things like that, you're going to have to show that you're up to date on them, and the most recent homeowners association bill. So that's something, especially for people who are investors and they may have 3 or 4. I got someone with 10 homes. You got to get all that stuff together. If your property, a lot of times too, you may have to show a recent property tax bill or a deed if you have a property that's free and clear, so that we can see that there's no other liens out there like private liens or anything like that. The other thing that you want to consider on that is that even though those properties may be free and clear, those still go against your debt to income ratio. You still have taxes and insurance on those properties, so those would be calculated